will help us understand why philanthropy needs to look at its giving in a new way. Thank you. Now we'll turn it over to Rashmi.
Thank you, Al. Welcome, everyone. Thank you so much. I will speak and introduce DCRAC and our campaign to you. I will then invite Andrea Levier to speak to the enterprise capital concept. Then Matt Parks, the president of Stepping Stones Community Federal Credit Union Board, will welcome and introduce Blanche Jackson, the CEO at Stepping Stones, to answer any questions that you may have, because our campaign is around building up our organizations and what our organizations can do. This is a landmark 5 million enterprise capital to strengthen DCRAC, its operations, and Delaware's economic future. Welcome. Thank you for your time. Hope all your questions are answered today. If not, I'm always available. DCRAC's mission is to ensure equal access to credit and capital. We address barriers to the racial wealth divide that leaves an average American family of color with only 16 cents for every dollar owned by the average white family. Despite the ongoing COVID-19 pandemic and the many ways it has undermined every aspect of life. Last year, DCRAC worked with more than 5,000 clients to untangle their personal finance, open bank accounts, resolve tax debts, draft a will, and much more. DCRAC's team of highly motivated, dedicated, devoted professionals make it happen. Thank you so much. This is a team that doesn't know no. Holiday closures, pandemic shutdowns, funding limitations, and the fact that our services are only a few. Our clients' needs are so much more. We do everything that we can to ensure that one who walks in our doors walks away being helped directly through us or through soft handoff to others. Going into our 35th year of operation, DCRAC is still the only organization in the first state that serves the community with an array of institutional structures that are needed by our community to advance economically, to thrive, and to transform their financial lives. Most attorneys and bankers just can't afford to take on the low wealth client base with complex and complicated issues. Our entire business practice is built around the low wealth client base with complex and complicated financial and legal issues. From such wraparound services customized to our clients, education, advocacy, we are proud to help Delaware and its residents realize the promise of an accessible, community-centric system that provides entry into the mainstream world of finance and law. What continues to make DCRAC unique is not only a commitment to robust, customized services for every client, but also our capacity, capability, professionalism. As public advocates, every one of you has been touched by our advocacy, I'm sure, financial experts, lawyers, and bankers. We push for changes that affect individuals' financial lives and in the process impact and help all Delawareans along the way. Founded in 1987, our vision is to build a just economy where everyone has a chance to succeed and provide for their families. We are working toward that vision by prioritizing our investments in our most precious capital, our people. We are building a just economy by creating institutions that our affluent neighbors take for granted. We chartered a credit union in 2011. Stepping Stones Community Federal Credit Union is a minority depository institution, a community development financial institute, a federal home loan bank, Pittsburgh member. And right in our neighborhoods at Church Street. If you haven't visited, we invite you to come and take a look. We formalized our legal programs, which we began in earnest in 2003, today in the form of DCRAC law. Our money school has provided financial education since 1995 through numerous iterations. The most powerful tool to building such an economy and responding to the social and economic justice calls of our time is the very fiber of our founding, Community Reinvestment Act. Practically everyone here is familiar with that because that too has touched all of us. This landmark legislation encompasses everything these past 2 years have taught us. As we build, we must ensure investments flow into the communities that need it most. Since the pandemic upended our lives, nonprofits have become essential businesses in our communities. Sector-wide, we experienced an outsized demand on us. Without these institutions of support, could you imagine how some of our neighbors would have fared the pandemic? Just as hospitals provided necessary medical care, DCRAC stepped in, as is our nature, to provide economic care to our Delawareans. Our Stepping Stones Community Federal Credit Union did not shut down for a single day. We helped panicked neighbors figure out how to access their money when their bank lobbies were closed. We made Paycheck Protection Program loans as tiny as less than $2,000 and as large as more than $700,000. That just goes to show we not only have the heart, we have the technology and the capability to do big and small. Our DCRAC law provided services that our communities needed the most. As you know, IRS shut down all the units except its collection notices that continued to go out. Low income tax clinic we operate was there for our communities. During the pandemic, wills and healthcare directive demands on our DCRAC law just skyrocketed. We were there every step of the way. Nonprofits are essential businesses. Like an enterprise or a personal budget, they need liquidity and capital that can be deployed during difficult times or when opportunities present themselves. We, the nonprofit sector, need capital to continue to innovate and meet our mission mandate. What we are asking today will transform the services we provide to Delawareans who need them the most. Our ask of $5 million in enterprise capital will allow Stepping Stones Community Federal Credit Union to leverage it into $50 million in deposits. Offering the same products and services our affluent neighbors take for granted, we bank Wilmingtonians. We build the credit profile of our members. We move them away from predatory debt. We make auto loans, business loans, mortgages, and much more. A 50 million credit union can serve far more than a 5 million credit union can. Please invest and reinvest in this vibrant and wonderful community. We need your support now more than ever. I now turn it over to Andrea Livier, an expert in business finance, a Yale School of Management alumnus, and one with experience running a national nonprofit, President Emerita Prosperity Now, and one who understands the pains, trials, tribulations of little nonprofits run by people of color. She will help us understand why our enterprise capital campaign is unique and different from traditional capital campaigns. Welcome, Andrea. Thank you.
Well, thank you, Rashmi, and thank you for such a great summary of all the extraordinary work that DCRAC and its affiliated organizations, Stepping Stones and DCRAC Law, are doing. It is an honor to be here with you today with all the distinguished guests and board members and others of DCRAC, and to be part of the launch of a campaign we have been working on for many, many months. I think that Rashmi brought up how we met, but let me just start there, is that we met several years ago when I was president of Prosperity Now, which is a national organization that is focused on addressing wealth inequality, and in particular, racial wealth inequality. We were running a initiative called Building High Impact Nonprofits of Color. Darren, you'll like to know, funded by JP Morgan Chase, working in multiple cities around the country to provide a whole set of capacity building services that could help raise their profile and their impact in their communities. Through this process, I met a range of organizations in Wilmington, all of which impressed me deeply, and it helped to really build out this initiative. I stepped down as president of Prosperity Now late in 2019, and as Rashmi said, accepted a fellowship at the Yale School of Management, where I won't even tell you how many decades ago I went to business school. And while I was there, I decided to address the issue that had always been my side job while I was running this organization, which is, why do most of the philanthropists that fund our organization violate every rule of finance that I learned in business school about how to build financial strength and resilience? And particularly given this was happening in the middle of COVID and a landmark call for racial equity and the absolute clarity of the deep and enduring economic and social disparities in our country, I thought there's never been a more important time to figure out how to use the funding that our organizations have in the highest and best way. So I decided to focus on the concept of enterprise capital. Also, some of you may know, called philanthropic equity, which was really taking a tool out of the playbook of venture capitalists. What have private investors learned over the years? That the best way to finance companies and ensure their success is to invest the money right into the balance sheet and to provide key control over how that funding is used based on what the entrepreneur needs to succeed. If we think about this, as Rashmi said, nonprofits are enterprises. They just have a different tax structure. And I would argue they have an even tougher job because they are trying to solve problems that the market cannot solve. And they are doing it in ways that requires constant innovation over time, as Rashmi has described how the organization has evolved to meet the needs of the residents of Wilmington and beyond. So with that, about a year ago, I published the Blueprint for Enterprise Capital, which really described why nonprofits need long-term, flexible capital, where the power and decision-making is shared between funders and nonprofits. And this is deployed over time in ways that help the nonprofit achieve its goals and strengthen its impact. It describes the value of this capital and actually includes 4 case studies, one of which is from Wilmington, which is Reach Riverside, which really talked about how enterprise capital was used to turn around an organization, which we all know is extraordinarily successful today. When the concept of enterprise capital was first imagined by Clara Miller, who founded the Nonprofit Finance Fund over 3 decades ago, it was really only thought of to scale an enterprise, which is often the obsession in the nonprofit sector. But the blueprint describes how you can use it to launch something new. You can use it to stabilize an organization. You can use it to scale, but we also use it to address the racial wealth divide in the nonprofit sector. I spent my entire career focused on reducing the racial wealth divide at the household level. And then as I've been starting to do this work, we see the exact same phenomenon replicated within the nonprofit sector and the kind of capital that nonprofits often cannot get. The other element in the blueprint is that we created a primer for any funder to say, if you want to do this kind of funding, how do you take the first step? And how do you move forward? And one of the most exciting things has been the momentum that this kind of funding has received. I'm working with the Winthrop Rockefeller Foundation in Arkansas to create a $50 million enterprise capital fund in a state that is extremely poor in resources and also has quite a weak nonprofit sector. I am working with the City Foundation, who's been doing this kind of funding since 2015, to work with 50 organizations focused on racial equity who've just received an enterprise capital grant, but really to think about how to deploy this most effectively. So when Rashmi asked me to help them imagine how might this kind of capital transform their organization and really become an example in a state that I think can lead the way in this country, I was incredibly excited, particularly given their mission of reducing the racial wealth divide and expanding economic opportunity. One of my favorite lines, which is not original by any means, when I ran Prosperity Now, is there's no silver bullet to address the issues that we are trying to address in advancing economic opportunity and building wealth. One can see in the set of initiatives at DCRAC that they understand you need to take multiple strategies to work together. And that's exactly how this is designed. By investing this capital into the net assets of the Stepping Stones Federal Credit Union, it then changes the economics of the entire enterprise and enables each one to move towards a model of economic sustainability that is key to what we want for our communities. The reason why I think Delaware, obviously, being the state of our president, has such an incredibly important role in moving philanthropy forward is that it's not just philanthropy that needs to change. We also need to think about how do we deploy public sector capital in this ways. One of the other organizations that was part of building high impact nonprofits of color in the Twin Cities, Build Wealth Minnesota, has just received a grant through the ARPA funding to help it design a program to address the racial wealth divide in home ownership in Minnesota, which is the greatest wealth divide of any state in the United States. So my hope here is that we can think very creatively about how we align both public and private funding for this institution, but also as a model for what is possible when we think about sharing the power and the responsibility to build out organizations that come with the financial strength and flexibility that they need to solve these incredibly hard problems that they've taken on. So with that, I want to thank you for being here, for listening to me, and I'll hand it back to Rashmi.
Thank you, Andrea, so much for explaining enterprise capital and how unique when we said it's a landmark historic campaign that we are launching. Of course, the $5 million is historic for us, but the fact that it isn't just building buildings, it's building institutions that will be there as they are for our people long after the funding stream dries up. So thank you so much, Andrea. I want to invite Matt Parks to talk a little about stepping stones and this number, $5 million, that he dropped in my ear a couple of years ago. So Matt, you told me if I could raise 5 million, I can sleep at night. Go ahead, Matt.
Well, thanks, Rashmi. Maybe I shouldn't have spoke too soon, but ultimately for everybody on the phone, I think we have a great asset, a very valuable asset in Wilmington and this Stepping Stones Community Federal Credit Union. Rashmi really it was a challenge right back in 2004, where you being the loudest advocate for the community and ensuring that us banks support the community. You kind of put your money where your mouth is, so to speak, and took the time and the effort to apply to obtain this charter back in 2004, for which it took, for everybody on the phone, it took 7 years. This wasn't something that was just given to us or it's easy to obtain. It's a very difficult thing to obtain, a federal credit union charter, or in our world, a banking charter. It's extremely hard to get. And, you really got it on the backs of a $50,000 grant. And I think a support from the folks at TD Bank, who I believe are on the phone, which we really owe it to them to sort of be the first ones to put some money behind the effort. But this charter, being a banker myself, it's two huge advantages. One is, as a credit union organization, we don't have shareholders, so our shareholders are really our members. So any money that the credit union earns goes directly back to the members, and as long as I'm involved in this in the institution, all the value that we bring will go back into supporting these members in terms of developing more inclusive products and services, or helping them to buy a home, or maybe taking a little bit more risk than maybe another financial institution may be. And then the second thing is, as much as us bankers hate it, as a credit union, we don't have to pay any taxes. So between not having shareholders and not paying taxes, we immediately have an availability of a significant amount of leverage, if you will, to help those that most need it. And that's the bottom line. So, I kind of threw out the $5 million to say, if you just take general provisions of capital as an institution, $5 million would allow us to use our federal guarantee to borrow money extremely cheap. As we as bankers know, right now, deposits are extremely cheap. And we could build up a $40 million deposit portfolio to go around with our $5 or $10 million of capital and be very well capitalized and be able to, earn revenues through, a mixture of safe and sound investments that we may make, reinvestments that we may make, as well as, just generally lending to the people we're trying to serve. And we're very fortunate. For those of you who have not met Blanche, I encourage you to come and visit. But Blanche gave up a very prosperous career as a credit union executive for our Delaware State Police Credit Union at first. She was, I believe, right, Blanche, you were at the ground floor of creating that credit union at the start, right?
No, that credit union's been around since
even longer than you, huh,
Yes.
Blanche? All right. But anyway, Blanche is a very experienced credit union manager and keeps us bankers in control in terms of what the credit union regulators will allow or not allow versus what us banking regulators will allow. So I kind of talked a lot, but this credit union is an extremely valuable asset. It's got advantages. As a CDFI, it's got advantages as a Federal Home Loan Bank member. It's got funding advantages by being able to raise deposits with a federal guarantee for up to $250,000 of depositors. Most of us banks on the phone are already depositors. We want to be able to expand the ability to generate these deposits from other institutions so we can go out and ensure that we can build an asset, assets that not only support the operations of our various programs, but also a lot of things that Rashmi and Jacqueline do on a daily basis, whether that's providing various legal services or tax help. I mean, I just think we've got this huge opportunity. And by the way, once we do this, it better be self-sufficient. I mean, I talked to Rashmi is that once you ask for the money, you can't go back and ask again, right? And that's what I think is also a big thing is that if we get this to a certain size and with Blanche's leadership, it shouldn't need another dime. And then anytime a state representative or a federal representative or a program like PPP comes along, we're going to have an entity that's well capitalized, that's well run, that will be able to handle anything that the community needs. And so I kind of close with that, but happy to answer any questions.
Thank you, Mark, so very much. So Blanche is here. My team, Jacqueline. I see quite a few other Carl are online right now, as are our board members. Thank you, Al. Thank you, Eric, Lisa, Mo, and I'm sure I'm missing a few that I can't see. Now it is time for grilling me and Andrea with any questions that you may have. But before you ask your question, here is a quick announcement. We believe so deeply in erasing the wealth divide along racial lines that we asked our Senator Coons for $500,000, all of which to go toward homeowners in the city of Wilmington towards their down payment, $10,000 per person. Our goal is to help 50 homeowners. The idea is this as a pilot project because HUD spends more than $15,000 a year per person on subsidy for housing. Why not look at putting that money, once not different from us today, once and for all so that that subsidy can be ended. And we are delighted to say yesterday, late in the evening, we learned that we have been awarded. That means we'll have to reflect our work to ensure that those 50 potential homeowners get the best deal from the housing, mortgage, down payment, and longevity of economic stability. So those are the kind of things DCRAC works on to ensure equal access to credit and capital for all. And now, questions. I'm sure you have questions. Lisa, go ahead. Thank you.
Well, thank you everyone for coming on. I am always amazed at everything Rashmi does. And thank you for joining us with our landmark $5 million capital campaign. And as I listened to the presentation, a question came to mind that some funds give unrestricted grants. Is that different from the enterprise capital? And if so, how is it different?
So Lisa, thank you so much for that question. And one of the things that I know Rashmi has shared the blueprint, but I also have a website that has frequently asked questions on it. We can share that link. And the one always is unrestricted operating grants. So in many ways, you think about this, they're related. And they're related in the sense that they both provide flexibility in terms of how a nonprofit wants to use them. In most cases, though, what unrestricted operating grants, hence the word operating is it's used to cover the shortfall between whatever it costs to deliver the products and services and the amount, how much money that nonprofit has to cover it. And so it's usually one time, covers the shortfall, and it goes right on to the profit and loss statement or revenue and expense statement. The other difference, and so not really the kind of investment long-term, the other difference that we speak about with enterprise capital is how do you align the capacity building services that help you really leverage capital? So how do you help a nonprofit understand its business model and how the business model then drives a financial model that'll take it to economic sustainability? In most of my experience, none of that conversation goes with the operating support. One of the things I've talked about often is that when we were writing the blueprint, we called every single philanthropic trade organization to see who was collecting data on who was doing this kind of funding. And we discovered there was absolutely no data, right? So that's one of the goals we have moving forward. There is data on general operating support. So one of the nice things we can do is help funders who are doing that already think about how they move the next step. Is that helpful?
I have a question, particularly before this formal launch. Andrea, I met with our leaders, so this wouldn't come as a surprise that in Delaware, in our backyard, come on, Rashmi, at least share what your plans are. Don't let me read it in the papers. Here was a concern about the ARPA funding, which, by the way, our favorite son from Delaware, we sent him to DC and he's delivered for us, not just Delawareans, but Americans with millions of dollars in American Rescue Plan Act funding. So our communities, municipalities, jurisdictions, state are abundant with money. We thought 5 million is a tiny little drop in that big bucket. It should be easy, particularly given that they're talking about capital. But here are some constraints, or what I heard were constraints. One, it's not a building project. We are not asking to build a structure into which only the affluent will be able to afford unless we invest in other people to move up. Two, it's got to be spent, thrown down the drain. This you're not spending, you're keeping. So has any municipality, and I think in your speech you mentioned Minnesota, how did they overcome these little barriers that our funders have placed upon themselves?
Right. And, it's such an interesting thing. One of the insights that has come out of all this work is how misunderstood the concept of risk is in philanthropy, right? So here they have grant money to give away. And one of my philanthropic funders said to me that her board will take $6 million out of endowment and change who manages it and talk about it for 5 minutes. She'll propose $150,000 operating grant, and the board will talk about that for an hour. And the risk of one is completely different than the risk of the other. So kind of figuring out how a state or a city makes decisions is a task way beyond me. But let me just say how we were able to do this in Minnesota, which is they set very clear goals for how ARPA was going to advance affordable housing in the city. And the organization had a very clear plan for how they were going to do that while also reducing the racial wealth divide. So they had a strategy, just like you do. They said how many homeowners they were going to get into new homes, just like you have a very clear strategy as to what the credit union's going to do and all the other things. And with that data, based on the goals, they were able to get $500,000 to go right into their net assets as part of the program. So that's how it worked, kind of combining the overall contribution of that money to very specific outcomes and aligning with the goals that the city had set for their ARPA funding in this particular area of housing. And I don't know if there's anybody else on this call who has any other experience with how the state is doing this, but I just think that those two pieces are critical to making the sale for all the outcomes that DCRAC and its partners are producing.
Thanks, Andrea. Any other questions? Al, Jacqueline?
Andrea, as you're working with some of your philanthropy partners in setting up these funds, are you hearing any recurring concerns from them or specific goals that they have as they're setting up the larger funding sources?
So there's kind of two elements to this, Jacqueline, which I think is so interesting, which is one of the kind of arguments I make is that by providing this kind of capital, you are not only increasing the return on your own philanthropic dollars, you're increasing the return that your nonprofit partner has as well. So the two go hand in hand. I don't know how often you've heard the phrase reverse engineering, which is when a foundation decides it has its own program strategy. And basically, if you want to get the funding, you have to adapt to that program strategy. One often says this of public sector or federal money as well. I wrote a piece for the Chronicle of Philanthropy on this, which basically says that reverse engineering is only serving to increase the risk of a nonprofit trying to tailor its way and also decrease the return that's going to come from it. I want to share that I was watching a webinar of Brian Stevenson of Equal Justice Initiatives, probably a nonprofit leader, one of the most renowned in the entire country, and they were asking him about his view of philanthropy. And he said, well, I just had a funder say, you have to change your business model to get my grant. And Brian Stevenson said, well, I'm not interested. And I thought, if that's happening to Brian Stevenson, that's happening to everyone, as a real example. The other piece that I'd say, Jacqueline, is that COVID and everything else that's been happening, especially has forced many, many funders to rethink what they're doing. And going back to what Lisa asked, is many funders have begun to see the wisdom of doing operating grants, unrestricted grants. They are also identified very clearly technical assistance needs that the nonprofits require to really achieve their own goals. One of the issues that has come up in Arkansas is that very few of the nonprofits know how to manage federal money with all the requirements, right? And several of the grantees said, the funders said, I don't want my grantees going to jail because they weren't able to manage this effectively. And so they're actually thinking about creating an intermediary that can handle the reporting and the compliance so that risk isn't added on. So it's kind of an interesting journey. The final thing I'll say is there's been a whole movement within philanthropy for at least the past 5 years called trust-based philanthropy, which really says that the decision-making really relies with the communities that you want to serve. So I think that has also been a big influence. And the last thing, I'm just about to make a presentation to the Board of Trustees to one of the largest foundations in America, and they have too much money to give away. And so the program officers want to present to the trustees that we have to rethink how we're doing this, because even to meet our very gentle requirement from the IRS is going to take much more creativity.
Andrea, do you think it's like a policy shift that is needed to help philanthropy look at enterprise capital differently? Because operating grants, as you explained, just help us get through one fiscal year to another. And our challenges are, if all I am doing is writing grants reporting all the time and already subsidizing with our time, how can we plan to be here for the rest of our community's lives? Because they will need us for a long time.
So the reality is there's no CRA for philanthropy, right? So why have you developed such incredible bank partners like we've already heard of from Matt today, right? It's because there is regulation that engages the financial institutions, and over years you have learned how to work together to your mutual benefit. There's only the most minimal regulation of philanthropy. The huge controversy around donor advised funds, for example. And so my view of this is that there's 4 things we need to do together. We need to influence by peers coming together who are interested in this and raising their voices. We need to demonstrate the impact of this. And that's where DCRAC comes in, by demonstrating what this capital can do. Matt was very clear. I would never say never though, Matt, because you never know the next innovative thing that DCRAC wants to do, where they need some more philanthropic capital to do it, right? But you demonstrate.
But Andrea, if the credit union's making money, they won't need the private sector. The credit union can make the money to be the philanthropist.
Yeah.
Hey, there's credit unions in this country that have their sponsorships on basketball arenas. Look at the Golden State Warriors. It's sponsored by a credit union. So if we can get that big, then Rashmi will not need to ask any banks for money.
All right.
From your mouth to God's ears.
I love that. Which, by the way, Matt, my brother has a seat on the floor in those games, so I'll let you know where he's.
So he's paying for that advertising.
Somebody, yeah. Where was I going? I'm sorry. You
talked about
regulation. So we need to influence. We need to demonstrate. Then we need to collect the data, right? We need the data, and then we also need to educate. So I've been doing a lot of training of program officers, many of whom never went into philanthropy because they like finance, right? But at an essential point, maybe we can have all the bankers do it with me, right? At an essential point, you know, I will say, I'll leave this nameless, one of the largest foundations in the country with the most sophisticated program-related investments. The head of the program said to me, I don't think any of my colleagues even know what a balance sheet is. And even I was astonished. And I said, don't they have retirement accounts? So they don't have that sense of how providing money in this way can be such a benefit to an organization.
Thank you
I
so
did-
much.
I did have a question.
Yeah.
All right. And actually, it sounds like you just sort of answered it with that last comment, but what are some of the next steps for DCRAC and what should we consider as we go forward?
So I think that's Rashmi's question.
So I mean, today is the formal launch of this landmark historic campaign. This is also one of the couple of things that Andrea mentioned just now: influence, demonstrate, data, educate. All of that were weaved into today's presentation. So our nonprofit partners who are here today, when you go out and ask, you are charged and tasked with, as we are, to educate and demonstrate, influence, data collect, and demand. Philanthropy gives you the luxury of certainty. And that is what enterprise capital gives us. In my personal budget, knowing that come what may, I will be there until my end comes, is that luxury of certainty. Businesses have that, governments have that, and the most important sector does not have that. We rely on our donors and the people's generosity with which we manage year after year after year. So really, that is what I hope we, the nonprofit sector, takes from it. Our banking partners, dig deeper in your pockets. It's only $5 million ask after all. And those of you who are invested as a depositor in the credit union, you know that this was just one deposit many years ago. You're getting CRA credits year after year after year after year. Likewise, when you become an investor in this organization, you want to be thoughtful investors, learn about how we operate, what risks there are, etc., and then give this trust in us. We've been here for 34 years. We've been risk takers. And then we have elected officials over here. Our ask of you is simple. Capital campaigns and capital money needs to be deployed in many ways. Redefine capital. It's not just building buildings. It is building institutions, and it is building our people. So the $500,000 grant that we've gotten to build homeowners will actually require more, because that money is going directly to homeowners, so they begin their wealth building journey with wealth. And then what other sector? If we have media over here, please feel free to reach out to me and ask questions at all. And if there are no other questions, then thank you so much, every single one of you, for being here in support of this, you might think crazy idea, but needed right this moment more than ever before. Thank you, everyone, so much.
All right, well, I want to also chime in and say thank you for everybody on the call. It was well done. I feel much more informed than I was before. I still have some curiosities, but I'll have some follow-up questions. But thank you everyone for joining us. Any other comments or questions or concerns? Then we will adjourn. Thank you very much for your time again. Appreciate it.
Thank you. Thank you. Appreciate it. And Rashmi, I will be reaching out to you soon. See how I could be of service and help you. Absolutely. Take care now. Bye-bye.
Great. Take care. Thank you.
Yolanda, thank you. All right.
That was pretty good.
Yes.
Exciting. Definitely a different way of thinking. Takes some getting used to. Oh, Jacqueline moved, so it took a picture of her now.
Lisa, as objective